Ladies and gentlemen of the crypto space, we're live on a Monday, February 26th at 11:35 a.m. The Great Rotation. It's interesting imagery, a vortex, but ultimately it signals or it signifies stepping through something and something else emerging, and basically the whole world is flipped on its head. Everything is changing. The secular trend has been locked in by many 6-month candles. 2 years of confluence suggesting, sure, a ceiling, but breach of historic resistance. And I'm referring to the United States bond market, treasury market, mostly the duration component, which is used as money. Interesting conversations we've seen on social media lately with talks of money. Lynn Alden, Jeff Snyder, and George Gammon, they were talking. That was a nice talk. What is money? Sure, it's an endless conversation of what it is, but ultimately, you could all make your own definitions, but they should be grounded in reality and be reasonable. And you could draw on these types of conversations from very intelligent persons, them, myself, and your own conclusions. So I define money the way I do, and money is, and I define the bond market as ultimately the money, and the money is used to create currency, and the currency is used for settlement trade, so on and so forth. So if we go by these definitions, we'll pull up the main chart. Structurally, the price of money is changing. This chart going up implies the price of money is going down, and it clearly has hit resistance. So the chart plays out. It tells us where things may be heading. If we hit resistance and we start to come down on this chart, the price of money is increasing. And that is a very different directionality change at a very different price point compared to anything in recent history. It's not even just recent history, because the bond market was very different prior to the 1981 peak in rates, which was the cheapest money in all of modern history post 1900s. Look at the volume on this market pre 1981, very different structure of the market, and now we come to the point where we finally are able to clearly see without ambiguity the directionality change, the breach of structural resistance. We get to see over the coming years where support will be, but we see resistance at the 200 SMA and the 6-month chart. Maybe the 50 SMA will be support. And all this is quite fascinating because it takes years to play out. That's the time frame that I like to inspect. That's where my mindset is, from understanding the structural nature of the system in which we exist. And the only way we could possibly navigate the system is to understand what it is, how it works, how it's structured. So that's probably without some sort of liquidity event or a credit crisis or whatever you want to term it, creating significant volatility, which scares everyone out of risk markets broadly and into the bond market. We would see rates probably hold as support, the 50 SMA and the 6-month. That'd be a significant reduction in rates. That'd be a significant bid in bonds in the 10-year on this chart. And that is a lot of buying because they've increased supply of this market by many trillions of dollars over the years. And the structure is very different than pre-1981. So it's a lot of dollars that have to come out of circulation to purchase these instruments, but overall, the purchasing of these instruments leads to further dollars getting created into the future, especially as the price of this money goes up. And that's the whole point. That's why I term this the money. As the price of this money goes up, heading into 3.25%, what does that do with the increased quantity of this money available in circulation? It gets leveraged to high heavens, and it gets turned into dollars, currency, dollar liabilities, liabilities of banks that use this money as collateral to create the currency units. Um, and if we look at the DXY, we're finally catching resistance, and overall, my general sentiment is exactly in line with what everyone else talks about, where we are in the cycle, heading into Q3, Q4, 24, Q1, Q2, 25, and and the money will be printed this year, and all you need is the right conditions after that. And that's our destination. The destination is basically consensus. The path is what interests me. The path is all the variability. And the path is not binary, maybe trinary, you know, trinary in that one, somehow it falls apart and we have this post-apocalyptic scenario and everyone is poor and broke and we need guns and butter and meals ready to eat, and sure, that's always on the table. So you have to size your positions, and that would be the guns and butter position. I'm not fond of that position. I don't think anyone should be fond of that position. That's the post-apocalyptic scenario. So on the other hand, you have the systemic event. You have the liquidity crisis where money is destroyed, and money is not just U.S. debt, but it's also other types of debt, and other types of debt blows up, and that is a significant reduction of currency in circulation and money as well, especially if bonds aren't repaid, commercial bonds or municipal bonds. And there's plenty of defaults that could be discussed where money gets destroyed. So, that all of that is clearly a potentiality, and that there's no reason to invalidate that when we clearly had that in end of 2019, heading into 2020, especially before March of 2020, a lot of money destruction, and that was your volatility dipped down, and they papered over it in a relatively short period of time, a month or two. But look what happened in March of 2023. It's the same thing, the volatility event, but they papered over it in a weekend. They prevented the destruction of the money, the volatility, the systemic event, because now is revealed the true fear. The true fear of this debt-driven society isn't the hyperinflation. So you could argue that the inflation numbers are underreported, but we're clearly not in hyperinflation, the 1,000%, 10,000% price increases on a yearly basis. But the true fear is the deflation. Is that because the deflation could potentially be contagious, and the debt-based system where debt is money, the deflation has a potential to be systemic because everything is based on debt somewhere being repaid. All dollars, all currency units that exist have an interest rate associated with them for them to exist. And that's a fascinating realization. So generally, if you're looking at a 5-10 year time frame, for the system to continue to exist, dollars must be cheaper. There must be more money in the system, and the price of that money will continue to be cyclical, but generally it must trend towards, it's going to, well, it's not that it must trend towards, it's going to trend towards being cheaper. The money will be cheaper cyclically, and as it reprices to be more expensive, the secular trend here, let me elaborate this with some lines. The secular trend being up, and the cyclical trend being the cycles. So there's your cyclicality, but there's your secular trend, higher lows and higher highs. And that's a problem from a structural perspective for sovereign nations to consider, for the United States to consider. But this is where it's heading. That's what the data shows us, that this is the earliest of indications, the bull off top in Q3 of 2023, that the directionality was clearly breached. It's not lower highs and lower lows. We have a fresh higher high as compared to 2018, and that's meaningful. That's the biggest inspection you can make, and it's not, the weekly trend, the daily trend, or whatever insanity you want to look at. From a trading perspective, it's the structure of the system. Because one, that gives us information we need to understand what to invest in, and two, it tells us that the system is truly different. The cyclicality will always remain the same, and you're going to have your blow-off tops, and you're going to have your crashes, and um, you're going to have your business cycles of sorts where the credit gets destroyed. Uh, but it's going to be different, done in a different way. You're going to see it and feel it in different ways. Let's see who's in the house. Tapsies is in the house. Um, Rotation enjoyers. So the most important thing from a rotation perspective that I take away from all of this understanding of the way money works at this point, the very definition of money, the very definition of what is investable is changing. And that's so damn fascinating because everyone, I still see everyone caught off guard. We could see a massive, and this is path. So this is not a certainty, but this is what I would like to see. I would like to see a massive rotation of systemic capital from the frothy bullshit equity market buyback, stocks go up, and that happens in the crypto space, obviously. That bullshit. It's all bullshit. That's all just player versus player gambling bullshit. It's bullshit. It's people taking money from other people, and that's okay if you're the one taking the money. It's not fun if you're the one being taken from. And in that game, it leads to a massive concentration of wealth because the vast majority get taken from, and the few are the takers. That's just the structure of the way that game works. And on the other hand is investing. So I would love to see a massive return of real investing where people actually understand what they're buying, why they're buying it, what the business is, what the significance is. The balance sheet from an equity standpoint, from a company standpoint, and in the crypto markets, companies. Real companies that have real products and services that are real businesses that have real revenue and they hopefully give you that money. That's the whole point of investing. I mean, would you literally buy a restaurant? Would you start a restaurant and get paid $0? You're the business owner and you get paid $0. Does that make any sense? Because that seems to be what the vast majority, the general public, loves to buy. They love to buy restaurants. They get paid zero frickin' dollars for investing in that business. That's crazy. That's what it is to buy zero yield. You're just expecting the real estate market to go up around you. So the business, the price of the business, the price of the restaurant goes up in price so that you could sell the business at some point for a higher price. You know what I call that? It's called stupid. Because it sounds stupid. Because it is stupid. You buy a restaurant because you want to get paid. And that is the simplest way to explain the concept of investing. And the problem with investing and the reason why it's shunned upon is because it requires a capacity to exert due diligence. It's very right curve. You need to think about what you're doing, why you're doing it, how you're going to do it. A business plan where you write down your understanding of literally what you're going to do and why you're going to do it and how you're going to do it. Do some calculations, do a little bit of math. And then that is how you outperform. Historically, that's how you outperformed. That was Buffett's whole model. Wait for the system to crash, find something that's mispriced because it's a business that's actually cash flow positive, and it has a price to earnings of less than 1. That was probably something I heard him say, or something along those lines, that made the most sense to me and that it all clicked. Something that's mispriced, a strong business, it's not going anywhere, it's cash flow positive, and the dumb market is selling it because they have no idea what they're doing, and sure, that creates complexity from continuing to own it for that period of time in which that irrationality in the market persists, but it doesn't invalidate the investment. You can capitalize by selling and buying back at a lower price, but it doesn't mean it's not a good business. And it's interesting and it's hard to digest because from his perspective, he's literally buying the damn business, not shares. Not he buys shares. He's buying a quarter of a business, a half of a business. So you have to really process the things he says from your perspective, where you're owning a fraction of a fraction of a business. But the same thing applies. It applies. It's applicable. It's pertinent. It's meaningful. It's real. It's the intelligent way to look at markets and capital management. That's why I appreciate it so much, because it's not the dumb money, it's the smart money. And the smart money doesn't always outperform necessarily, but at least you have a good story to tell that you did something intelligent, you did something with strategy, with reason and logic. And to me, that may be even more meaningful than outperforming. And in fact, it is. I did something because it was the right thing to do and it made sense and it did very well. And I underperformed Dogecoin 50,000 bajillion percent because that makes for a stupid story. And it's as simple as that. Positive vibes. DeFi futurist. Hi Cap, I'm back. Yes, indeedy. We're always here. We're not going anywhere. I understand these markets too well to not see them as the best place for capital, period, on the planet. Gazika, hi Cap, always a pleasure. Emmanuel, no, my mom. Oh, hey, Emmanuel. I hope all is well. You do the best you can. It's, um, it's tragedy all over the planet, and it is complicated. Um, I share the sentiment, and I have all the empathy in the world for all these complexities. Athletic concept. Good morning, superstar. Bunny might get a bid. Explain how it extracts revenue from Uniswap and anything similar. I don't know what they're building, so I'm curious on what ends up being a product. Right now, it's max risk, max reward because it's speculative. You have no idea what kind of products they're building, and we've seen their text and their ideas, and that's meaningful and that's speculative. That's the point. Um, I like what they've talked about with regard to products in mind. I even like the current implementation. So the perspective to have is 10 years down the road where Uniswap doesn't have a couple of $1 billion, it has 100. It's a $500 billion, and it's a good part of capital markets. In that regard, there's a good chance that even the current Bunny V2 is a very productive investment. And whatever they're cooking up from a new product perspective is just that much more. So it's just food for thought. This is what we do, and that's something to assess. I have not looked into it further from an additional allocation standpoint. It's just not on my radar from owning any more. Um, Raul, pleasure, athletic concept. I want to be right 5 to 7 years, not just rich off trade, investment versus trading. That's well said. And then you have a good story to tell. And then at the dinner table with your older aunts and uncles and family members, it's not just what is the kid doing? It's a good story about owning businesses and how did you know that you wanted to buy these businesses? Because you were an investor and you did your due diligence and you owned these businesses really early. And that's the same thing about maybe the internet in 1990s, late 1990s, and you saw these businesses and you just had a foresight of where things may head. And it turns out they did head that way, and that's history. That's the way it works. Killis is in the house. Much a pleasure. Sarko, hey, Noah. Rotated some of my cash position to FXN last week to ride the narrative of FXUSD. Need more cash for future investments. Cash, that's the whole complexity. What is in cash? What is invested? And you always need cash because you need to live, you need to eat. So you need to always respect that component. You can't invest everything. If you invest everything, you don't have any money to live. So the perspective to have is the majority trade time, convert time, invest time in exchange for currency units. So that's the same thing here. Instead of investing time for currency units, you're investing, frankly, currency units, types of money for more currency units, and that's literally what an investment is. You're giving capital to someone else who's ultimately going to do work and be productive, and in this regard, it's financially productive. And in exchange for that investment, you are getting a return on your investment, an ROI, an APR. And that's the way this game works. So, what is the cash position size versus the investment position size is an age-old question. There is no answer, and it's all gut instinct. And you always have to, you know, you do the best you can. It's as simple as that. Tape push share CTR is only good for larger positions to lock vote right. I find no comfort in 50% of it being farmed. I have no idea uh, with regard to size and consumption of the protocol. Um, it is not farmed. There is all the emissions are done. It is a fixed supply and it is fully diluted. So there is no dilution at all from where we are. Um, that is my perspective. So combined with it being fully diluted and its TVL being as large as it is, that's what I use to identify it as being mispriced in combination with earlier in the stream, the excitement of a Sarco with FXUSD. I see it as a beta on the Aladdin DAO, the group of Aladdin protocols. So that is my perspective. And it may be that ALD or Cleave is a better beta, but what is better? Listen, if FXUSD and FXN do well, at some point it's going to carry through to all the Aladdin products, and that's the beta aspect to it. So that's my sentiment on it. That's right, Crypto Blunder. CTR is 100% circulating. There is no dilution, there is no emissions, there's no incentives. It is fully diluted. So that's just something to think about, and I find it very interesting. Is the regulation stepping back from token staking? Maybe. In which country? And this is why you have to have that 10,000 foot view. In which country? Is U.S., but are you investing in the U.S.? Are you investing in U.S. companies? No. Are you investing in another country's companies? No. You're investing in something that hasn't been fully digested yet. It's a landscape of financial companies that are accessible to all countries, but not of any country. It just is what it is, and it's a it's a it's a concept that has yet to be fully digested by one, the mainstream, and two, certainly by political regulatory bodies. What does that mean? How are you applying regulation if a kid in South Africa creates a protocol or a business and it's just there and anyone can access it? How does that fall under the regulatory umbrella of anything to do with something in the U.S.? It makes no sense. Just because I could interact with this business in South Africa, so maybe they're going to try and jam it into like these international old school legacy rules. Fine, sure. So just block the U.S. and you're no longer servicing the U.S. and then you have uh, uh, you get an identity in another country. Was it? Uh, oh my God, who's issuing those identity cards? Pa, pa, there's this little island that's issuing identity cards for KYC. Okay, so you have an identity in another country. So I don't know. You see, but the point is, when you inspect it like that, where, all right, so I'll get an identity in another country and I'll use the product even though it's not offered to United States persons. So it means it's all bullshit. The whole concept of trying to enforce and regulate and control everything is just all bullshit because the world is changing where you're not really a person in one particular country. You're a person that can interact with businesses from any country, and that's why everyone uses VPN. Isn't that interesting? So I see everything is changing in that regard. So that means something big from a regulation standpoint. And, regulation makes perfect sense. If you buy a property in downtown New York City and that's where your business is, and literally you are a business in New York City in the United States, so you're regulated it from that perspective. But these businesses are in cyberspace, and it's not just Web 2 cyberspace where you need to have a server, an AWS server, or literally computers in a warehouse in Brooklyn. You have this code that's executing on servers that are located literally around the planet on the EVM. So it's not like it's not in a regulatory fixed location. So, as I originally stated, it's conceptually different this time. What, who is to be regulating these things? What does it even mean? And that's fascinating. Um, US with Uniswap, maybe, because that's an interesting tell if Uniswap is moving ahead with that and they fear the regulatory hammer of the United States, maybe that does mean something. So it could be a little tip of the hand from a poker perspective. How can Hayden implement that? He's done some censorship already with Uniswap. Well, Hayden's doing nothing. This is all governance and this is all an organization, and there's a whole laundry list of persons that are involved with his organization at this point. So that's stuff to like really take to heart what Chris Black talks about. And we could all have different opinions about his content, but he's right. Period. And who's in control? Who owns the uni tokens? Who owns the foundation? And it's a lot of institutions and a lot of there's literally educational institutions, and it's quite interesting. I can imagine what's going on behind the scenes as the early actors want to own pieces of this business landscape. That's literally what you all are doing. You're trying to stake your claim and try, as we talk about, to try and invest in this very early business landscape that's accessible to all nations, but of no nation. This is all early. It's still early. It's all started in 2020. This did not exist in the same way it does today pre-2020. That was an inflection point. There were no businesses pre-2020. The market was completely different. But now there's actual business. That's what's different this time. I see, by the way, Crypto Capo is calling for a big correction as usual. Correction in what? Got to be granular. And I think there's no reason to not have a big correction in money. See what I did there? Money. And Bitcoin, Ethereum, Solana, Atom, Phantom, Avalanche, what have you. Money. And clearly there's a knock-on effect from that kind of volatility. Volatility has a way of being contagious. And sure, that makes sense. But the whole point of today's stream is the concept of a great rotation of what is a viable investment. And that is a train of thought or a self-reflection that I like to entertain quite often. And I think it's very much a changing landscape of what it means to be an investment. The vast majority think Bitcoin's an investment. No, it's not an investment. It's a money. It has moneyness. It's a type of currency unit, and the only way you're able to really settle a transaction is to sell it, and therefore, it literally, by all foundational properties, is a FX actor. It's like a FX pair. So if you go to England and you're in London and you have dollar bills in your pocket, sure, the merchant may accept dollars. The odds are they want pounds. So you need FX support. You could pay with a credit card, but that credit card is taking dollars and converting it to pounds and settling the transaction. You see, it's the same. It's all the same thing. You just have to really put everything into this type of framework. And then you get to see the whole picture that's forming. And that's the same as Bitcoin. If a merchant doesn't accept Bitcoin, but they accept pounds, and there's liquidity between Bitcoin and pounds, you can pay with Bitcoin as long as you're automatically converting to pounds. And if that's done in a seamless way, you see? So, but it's not an investment. It's a type of cash, a type of currency. It's a type of currency with moneyness, which is interesting, but I guess also dollars have moneyness. So it's a whole never-ending conversation of the distinction between a money and a currency. So it gets weird, but it's quite fascinating because the better you understand it, the better you understand the way the world works. Killis, Turks and Caicos. Oh, Turks and Caicos is a very nice island that happens to be dollar denominated. Anyway, I'm speaking purely from a vacation standpoint. I happen to have a high opinion of Turks and Caicos. But yes, why can't you start a business from Turks and Caicos? Why not? And that's it. You just need the FX and then it all works. Jishu, Captain, been in crypto since 18 with few cycles experience. I'm definitely more confident, yet potential investments are exponentially multiplying. So more need to learn. Due diligence, yes. Well, you said the keyword investments. And if you can sell something and you have to sell something, is it an investment? You know, that's why I look at these things as businesses. And then it's a different pace of investing. Look how real estate investors invest. They're sure as hell looking at a lot of information, the comps in the area, the forward projections on demographics, the forward projections on the flows of populations, maybe state income tax, and that's why there's such a massive redistribution of U.S. national population to Florida and Texas because it's coming from high tax states to zero tax states. It's a tax arbitrage. This is all the things that real estate investors look at. We might as well start encouraging the investing population in the crypto markets to look at these types of characteristics of these businesses. And it really reduces to very simple things because even real estate reduces to the same fundamental inspection as crypto businesses as it does meat-based businesses, the equities markets. XYZ. I'm going to spend X amount of money. How much is it paying me? And how long is it likely to continue paying me? It, does anyone give a crap about anything else? If you are wealthy and you spend $10,000 and someone's going to pay you $2,000 a year for that money, that means you have a 5-year ROI. You are getting 20% APR, and you sure as hell want to do your due diligence to make sure they're going to still be paying you that in 5 years' time, such that your ROI is actually 5 years. 5-year ROI is pretty good from a venture capital standpoint. That may be around reasonable. They may actually have a longer expectation, 8 years. But at some point, you want an ROI. So uh, the rates, the interest rates for the 2010s were completely distorted and broken. 2% APR is bullshit. It's a 50-year ROI. So no, that doesn't work from an investing standpoint. That doesn't. So it's dead. Investing was dead in the 2010s. There was no such reality. But a 5-year ROI at 20% changes the entire equation and becomes very interesting. And what if the APR is even higher and the ROI is 2, 3 years? Then it becomes really, really interesting. So that's what I like to think about, especially heading into 24, 25, but more importantly, 28 and 29. Think about the next cycle from a hindsight perspective, and you will hopefully gain some clarity, some perspective on where we might head this cycle and what the world will be like heading into 2030. It's got to be a different world. The whole system is changing. The whole nature of work is changing. The whole nature of education is changing. The whole nature of energy is changing. It's all changing. So project out 5, 10 years, and that's where you want to be investing. That's the kicker. You're not investing in today, you're investing in the future, and you want them to pay you for being able to see that. And that's what it means to be an investor. 41 people, 12 likes. Smack that thumbs up button. I appreciate each and every one of you. Click, 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 click. Ethereum's over $3,100. Looks very healthy. Bitcoin at a respectable 53,418. Bitcoin outperforming Ethereum today. Why? Because of those passive flows. I mean, look at this chart. Look at this chart. It beats the crap out of NVIDIA. So those passive flows are changing the nature, the structure of the system. This is going to be quite interesting, 24 into 25. The destination is already established. There's no getting around the destination. They have to print $13.9 trillion worth of money this year. They have to. That's what they're going to do because they have to pay the bills. So that's what's going to happen. And what is the implication of that kind of money printing with regard to dollars in circulation? What at a 10 to 1 leverage, that's $139 trillion is getting added to the system this year. And that's at 10% leverage. What if it's 50? Not 10%, 10x leverage. What if it's 50x leverage? Because that's usually what you do with pristine collateral. You leverage the crap out of it. So you're talking about hundreds and hundreds of trillions of dollars are going to get added to the system this year. And what do you do with dollars? You don't just buy consumables. And sure, you do. Nation states do. They buy consumables and store them, raw commodities. But a good part of all money is used for investing purposes. So, and that bleeds over. And now the crypto markets are much more investable than they ever were. So they should garner a lot more attention than they historically did when people thought of investing solely from an equity standpoint and a stock market standpoint. Now the crypto markets are much more acceptable. The stigma has been lifted. So what do you have in 24 and 25? The most record largest money print in financial history, combined with a changing structure of what it means to be a viable investment, heading into a world where uh, money is more expensive because the cost of money to borrow is more expensive. Um, I do say that money will get cheaper from a bond price perspective, higher lows and higher highs. But if that implies higher rates, it's more expensive to borrow money. So this is a changing world. So in this changing world, what is a better investment? And I see the crypto market as probably the best thing to own heading into the future. Time. Let time do the work. Pop your questions. If anyone has any final questions, we'll wrap it up in a couple minutes. Frax bounced off low 815s, back around 9. Structurally looks wonderful from a monthly standpoint. Break down, break out through the monthly trap. Resistance, previous resistance for 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 months of resistance on the monthly TWAP. Broken to the upside. Resistance flip support. Support expressed for 1, 2, going on 3 months with 3 days remaining. This is a very similar chart to everything, but this happens to be a very clear expression of resistance flip support on the monthly for the time weighted average price. Some assets did it earlier on. Solana, for instance, this is a very interesting chart, especially with 2 hits of what looks like a trend resistance from a monthly perspective. Should see a retrace of Solana at some point. Hopefully, we go sideways heading into summer, which is something which don't underestimate. I think that would make a lot of sense. And we see Solana grind down to, the 80s, and it's finding itself on monthly time weighted average price support somewhere around June. And then you get the breakout, and that actually looks pretty good from a candle, a moving average, and a timing consideration for what's going to play out with regard to money printing in fiscal 24 for the United States. Ethereum, Bitcoin looks just as good. Lots of opportunity for discount below the 50 SMA on the monthly. Clearly never even hit the 100 SMA on the monthly. So overall, this expression of a trend uh, held, and thus far it's held very well. And we have two interactions with the monthly 10 SMA as resistance, and we have the 50 SMA below. So this looks like a very interesting trend. I don't hold trends in much high of a regard, but in any case, the 50 SMA held the support for 1, 2, 3, 4, 5 months, 3 days left for the current candle, and it's well above the 50 SMA, so it's going to open above the 50 SMA in all likelihood. That's a lot of months of support on a moving average. That means at that price, it's become very interesting to allocate capital. So supply is going to get there's going to be less and less supply, and when the buy pressure encounters less and less supply, price goes up, and that's exactly what's playing out here. Um, are you still comfortable with keeping your assets on ledger? You think the outrage over them having access to keys? They have. I don't see much risk in any regard. It's not like the assets are on Ledger. They're being managed by Ledger. You could take your seed phrase, 1224 words, and put it on any other wallet that accepts that kind of mnemonic phrase. So that works just fine. So for purposes of blind signing and engaging with transactions, I don't have a problem with Ledger devices, and they're extremely ergonomic. They're extremely portable, so they are still very useful in my opinion. I'm sure you addressed this when it happened, but I think I missed it. Yeah, that was a bit ago. And I don't respond to social media as uh, as many would think is the case. So your assets are not on your ledger, so I wouldn't use that feature. I would not use this auto backup thing that they're offering, and I wouldn't upgrade my ledger, and I'm not too worried. I think if you what matters most is a couple of folks have told me from a legal and like accounting standpoint is do what it takes to sleep well at night. That's the most important thing. So if you're uncomfortable with it, use an alternative device, and of which there's plenty of alternative devices. But I wouldn't worry too much. TJ Demuto with the last question for the day, maybe. Which protocol with a high APR would you consider purchasing at current prices? Looking at Aura, Prisma, CVX, Lit, etc. So will those high APRs get diluted? Most likely. High APRs don't tend to stay high APRs for a long period of time. They tend to be taken as an opportunity, and people crowd the trade, and the yield gets diluted. So it's a good, interesting list that you are thinking about. Um, very different characteristics, each one of them. Each one of them is an entire conversation, an entire story. And it's not for me to consider purchasing because of that list, I would consider purchasing none of them. For me, they are too expensive. A good time to purchase them, you could look at them in the charts. A good time to purchase Convex would have been early 2023, and then it dipped down further. So it was not much of a discount. Look, if you bought at the bottom in 2023, January of 2023, at $3, it dipped down to 230, but that was on a wick. So it was a marginal lower low. So those were the good price points. About $3 was a good price for Convex. Um, Aura is still relatively low, but it has a different narrative in play. I have Aura somewhere around here. I mean, it's still 80 cents. It could be finding bottom. In fact, that does look pretty good for finding bottom. It's finding bottom pretty late. Notice if you bought at the end of 23, this is on the weekly instead of the monthly, it was marginally lower. So 67 cents compared to 58 cents. So this is looking decent for a potential reversal. But this is a whole long conversation about the federations and what's emerging. And we don't know what's emerging. We have glimpses of what's emerging, um, but we don't know really what it's going to form into, like whole curve federation versus balance of federation. There's not really a federation. How many folks are recycling aura? That's the whole recycler and sterilizing narrative, and it's an interesting position, and I appreciate my position. I think about whether liquidating or not. My entry was in the 180s, 180 or so, so I own way up here. So I'm thinking a lot of things. 4 month lock compared to 4 year lock, and I don't like the short locks. I appreciate the long lock. So if when the lock expires, clearly you have a capacity to liquidate. So if I have a capacity to liquidate, is it really an investment? It's a transient investment. If I liquidate, there goes capital to the cash position. Is that opportunity cost? Should maybe I hold it? So maybe this is a type of asset considering the structure with the 4 month lock that you ride it until to move finally breaks down. So we're not even into the cycle. That's the kicker that most don't understand from macro perspective. We're not even into the cycle yet until move finally breaks down to the 80s, 70s, 60s, and volatility finally collapses in the bond market. And that's when everything starts to just run and go up, and it doesn't stop going up. So that's the type of thing, unfortunately, I think about with regard to a 4 month lock on an aura position. When this thing runs up to 3, 4, 5, 8, 10, 20, 30, 50,000, whatever the hell it runs to, and then you exit. That's the problem with 4 month lock, in my opinion. That's why I appreciate the multi-year lock. Um, changes the equation. Purchase, not a position. This has because of this 4 month lock, it gives it properties of cash. Hybrid properties of an investment and properties of cash because you could sell it for cash. With a 4 year lock, you can't sell it for cash. So changes everything. Anywho, I hope that helps. Let Prisma. Prisma is a whole other story. This is the problem with the four different assets. It's everything's a different story. Looking at RAM too. Interesting price points. See if I can get Prisma up on this chart. 77 cents. I mean, Prisma has a tremendous amount of LSD absorption, tremendous amount of stablecoins that it has printed, both the stable kind and the volatile kind with its new Ultra. Very interesting protocol. Uh, I'm not in the position to be purchasing anything, so I'm the wrong person to ask with regard to purchasing. With regard to price points, it looks like it's a relative discount. Emissions are starting to slow down with their emission curve, which is interesting. Uh, here's the complexity. It's hard to see investments as you get later into the cycle because as you get later into the cycle and volatility finally starts coming down in the money market, bond market, that's when everything just runs. At some point, everything just runs in the crypto markets. Why? Because the crypto markets haven't had the run in equities. Equities have this passive flows from 401ks. It's just constant bid, constant buy pressure. But crypto hasn't had it. It's really cyclical. So the crypto space has the business cycle. Everything gets wiped out. Price points get completely obliterated. So when money comes back in, everything just goes vertical. The multiples get spread around everywhere, which means it's very hard to distinguish between something that should be a transient investment, something that should be cash in a forex play where you're swapping and expecting relative outperformance, or something that's an investment. And from an investment standpoint, when the market starts to get frothy, that is the worst possible time to be thinking about an investment. Why? Because you're not buying at a discount. You're certainly going to be buying at a premium. The time to be thinking about investments is with the cash that you're able to save from income, with the cash that you're able to accumulate from actively engaging in the market, capital gains, trading, the FX trading of the cash positions. And then you start to buy 2000, end of 2025, heading into 2026. And then things start to finally bottom in 2027. You see where I'm going with this? And because that's in hindsight, in end of 21 and 22 and 23, those were, end of 21, market top. 22, things are coming down. Maybe you could have gotten some interesting investments at the end of 2022. But guess what? At the end of 27, heading into 28, considering and comparing the structure of the market and this and where these businesses are compared to 2022, 2023, from the perspective of 2027 and 28, we're going to have a hell of a vantage point inspecting the delta, the where have these businesses come from and evolved into. It's going to be a very interesting landscape in the coming years. So in many regards, a lot of these investments are late. 2023 was more of an opportunity to get a better position size because that's another important consideration when you're investing late. Can you acquire an appropriate position size? And if you can't acquire an appropriate position size, you must invalidate the investment. And it becomes an increasing burden the smaller the portfolio. The smaller the portfolio, probably not going to be able to invest in much, and you probably should be engaging in forex trading, which is basically Bitcoin, Ethereum, Solana, DOT, Atom, Osmo, and just all of this shit. And just from a capital gain standpoint, it has the associated active reporting associated with it from a tax reporting perspective. So that's active versus passive income. And I would encourage folks to understand the difference between active and passive income from a reporting standpoint. It's a very different type of income. Notable. Anyway, I appreciate all of you for sticking around to the end of the stream. 47 people made it to the end of the stream. Looks like the market's back, maybe 15 likes. Smack that thumbs up button. I appreciate each and every one of you. Tell everyone to subscribe because we could all do a little bit better together. Link in the description for the most rational community in the entire crypto space. We appreciate everyone that stuck around during the bear market. And it's been a hell of a run thus far. We're going to keep this party going heading into what should be a very interesting 2024 and 2025. See you guys later this week. Peace.